Climate change is adding to South Africa's financial pressure. Reserve Bank Governor Lesetja Kganyago has highlighted it as one of the key factors to have a negative effect on the economy in coming years. He says it will now play a key part in the bank's scenario planning. Kganyago made those comments at the bank's AGM in Pretoria. He added that the effects of climate change were becoming more frequent and more severe, as highlighted by the recent winter storms that lashed at least 4 provinces, and which necessitated the declaration of regional states of disaster. Shoprite's rung in higher annual sales. The supermarket group, which operates in 9 countries across Africa, posted total sales worth 240 billion rand, which is 12% higher than the prior period. That increase comes as the majority of its brands reported double-digit sales growth and as it added 292 stores during the period. Its core business, Supermarkets RSA, meanwhile, contributed 81% to total sales after achieving sales growth of just over 12.3%. Shoprite set to open its books in September. Glencore will announce whether it will separate its coal business next week. The miner and trader says it's in the process of consulting with shareholders. That comment accompanied a half-year update which showed lower numbers for copper, nickel, zinc, coal and cobalt production when compared to the same period a year ago. But Glencore is optimistic that a stronger second half is on the cards. It's maintained its 2024 production guidance for most metals and lifted coal to reflect the acquisition of Teck steelmaking coal unit. BHP is advancing its copper ambitions. The Resources Group and London Mining have agreed to take over developer Philo Corp, which owns the Philo del Sol copper project in South America. The companies will also form a joint venture which will hold that project and the Josemaria project. BHP says the JV will create a long-term partnership to jointly develop an emerging copper district with world-class potential. BHP's total cash payment for the deal totals $2.1 billion. Merafes flagged a slump in half-year profit, with headline earnings expected to register a decline of up to 43%. Production came under pressure during the period. Ferrochrome output totaled 154,000 tons, marking a 17% decline. Merafes says that drop is due to the Rustenburg smelter, which has not been operational this year due to prevailing market conditions. Netcare's chairperson is set to retire. The healthcare group says Mark Bauer will step down at the end of September. He has held that position since January 2023. Netcare says it will make an announcement in due course with regards to the appointment of a new chairperson. Further afield, BP increased its dividend and extended its share repurchasing program as it delivered upbeat profits in the second quarter, with weak refining offset by stronger oil prices and retail. Here's more detail on those earnings in this package report.
BP shares surged at the start of trade. The jump came after the oil giant beat forecasts and said it would raise its dividend. Second quarter profit came in at close to $2.8 billion. A weak performance on refining was offset by higher oil prices and strong retail sales. The result will ease pressure on new Chief Executive Murray Auchincloss after 2 straight quarters when earnings fell short of expectations. The Canadian took over in January and has vowed to revamp BP's operations. That includes focusing on the most profitable businesses, mostly in oil and gas. He's stepped away from some of the green commitments made by predecessor Bernard Looney, who had wanted a bigger emphasis on renewables. Instead, Auchincloss has approved development of a major new oil field in the US Gulf of Mexico. To cheer investors, BP lifted its dividend by 10% and pledged to stay the course on share buyback plans. The firm says it intends to buy a total of $14 billion worth this year and next.
And Italy's Prime Minister is concluding a 5-day visit to China. The trip aimed to begin mending the rift between Rome and Beijing following Italy's decision to withdraw from China's Belt and Road Initiative. Here's our reporter, Anati Ndevu, with more.
That's right, Zinati. Italy's Prime Minister is wrapping up a 5-day trip to China, and the visit was supposed to start repairing a rift between Rome and Beijing after Italy decided to pull out of China's so-called Belt and Road Initiative. For more on this, though, let's turn to DW's correspondent Cassandra Sant, who is currently standing by in Berlin. Cassandra, thank you so much for your time. Maybe you can start off by telling us, what was Italy's involvement in the Belt and Road Initiative, and why did they pull out?
Thanks for having me. Well, the Belt and Road Initiative is one of the cornerstones of Chinese foreign policy. It's branded as the new Silk Road and is a way to make it easier for Chinese goods to get around the world. The project includes rail, road, and maritime infrastructure throughout Asia, and increasingly it's moving into other continents like Africa and Europe. So these projects do come with a heavy price tag. However, China actually spent over $240 billion bailing out countries struggling with Belt and Road debt between the years 2008 and 2021. Now, Italy had first drawn some criticism from allies when it joined in on the initiative in 2019. It was, in fact, the only G7 nation to join the project. But since Italy elected Giorgia Meloni, who's a right-wing politician, that country has had a different attitude towards this project and pulled out last year, which caused a bit of embarrassment for the Chinese. Now, the main problem the Italian government had is the trade imbalance between Italy and China, which they feel had tilted in China's favor.
And Cassandra, why is this visit of importance now?
Well, both of these countries want something here when it comes to trade. On the Italian side, they want to see better access for their goods coming into China, and they want increased Chinese investment in Italy. Prime Minister Meloni even pointed out recently that Italian investment in China is about 3 times as much as Chinese investment in Italy. And when you take into account that China is the second biggest economy in the world, it's easy to see why Italy would see that as an imbalance. Now, China, for its part, sees Italy as a persuadable partner within the West. Remember that Italy has struck out on its own with Beijing before, which means it could be a potential ally when it comes to a current sticky topic between China and the European Union. That would be the bloc's tariffs on Chinese-made EVs. EU members will vote later this year on whether to back the European Commission's tariffs on Chinese-made EVs. Italy has so far indicated that it will back the motion.
And the two governments, Cassandra, did sign some trade deals during Meloni's trip. So what can you tell us about those and how significant they are?
Right. So the two countries signed what they're calling an action plan that's set to last for about 3 years. The signed deals include an industrial collaboration memorandum, which covers electric vehicles and renewable energy. In comments on the matter, Meloni said that the EV sector is where China is on the cutting edge and that country can share the new frontiers of knowledge with partners. Meanwhile, Chinese Prime Minister Li said that China's push to upgrade its economy will increase demand for high-quality products, which would expand cooperation between Chinese and Italian companies. He also pledged to open Chinese markets further and ensure that foreign companies get the same treatment as Chinese ones. A statement from the Chinese side also added that the cooperation also focuses in the fields of shipbuilding, aerospace, new energy, and AI. So a bit of both for both sides here, but the spotlight will remain firmly on EVs until the EU and China come to a resolution.
Cassandra, let's leave it there for now. Thank you so much for those updates. That was Deutsche Welle's Cassandra Sant.